Greetings, market rebels. Welcome to this week's macro measure and sector situation again combined. Here is our trusty disclaimer. We're keeping the date conventions for now, but I think I might switch those in the second half, which would be starting next week, of course, just on a minor note. And then here's our intellectual property rights notice. And again, I'm Wayne, and I'm getting this taken care of at, let's see, it's probably around, I think it's around 2:20 p.m. here on the East Coast on Friday, June 28th. So another expiration day. But as I've mentioned many times, I've got so many things happening really as far as the eye can see on the calendar. So I've got to keep weekends open to address a lot of different things and so on and so forth. So I'm trying to get this stuff taken care of on Friday afternoons. I like doing it more really after the week is completely in the books, but this is the price we pay for having to take care of things a little bit early. Anyway, this is the notes. I'll try to make sure I cover them, but I think I'm going to get started on bringing up the charts and also kind of making comments about these bullet points this week. So just bear with me as I reshuffle the deck here and get my slides out of the way and get charts back in our way. And that should come up with screen 4. So I'm going to get started here and then kind of backtrack my way to the slide points. I'm calling this that we're this week that we're in concern wait mode, and that really is sort of where we left last week. I mean, it's unfortunate, but you probably can save a lot of time. I'm just going to always recommend going to speed 2x, and we'll go from there. But unfortunately, this just wasn't that eventful of a week. This week is more of what we had last week, where we went out wondering, about key SMAs, and as you can see, really we were talking about Friday, we were near the 10 SMA on the daily. Now I realize we're on the 15-minute here, but you can see just how much after that big burst Monday that we after that big burst, we came back in last week to right near here, which was right near those 10 SMAs. And we've stayed very close to those all week, even today when it looked like we were getting somewhere finally after resting for so long. They brought it all the way back in, so this is very, very tough trading when you're looking for big time momentum. But I've got to say that, as I mentioned in cocktail hour, I've got to congratulate so many market rebels that have been really grinding very well this week. So hat tip to y'all, because it just hasn't been one of those breakaway weeks. Fortunately, I think we were able to get some good names in to the services and get prepped for things due to UOA that it hit, or just finding setups with all the other work we do. And it looks like it worked out, but it's not always that way. Sometimes when the market doesn't deliver very much movement, it's tough to really get anywhere. But certain stocks really stuck out, and that really helped. But you can see, right, what we have here is the basing, looking at an intraday, really kind of basing, consolidating since last Friday, and we just stayed around there all the way really into yesterday's close, where they kind of jammed things late and kept that going here this morning. But as I said, that got sold into. So you have this breakout attempt really that's sort of, at this point, you'd have to say failed. And now we need to see where things set up on the daily. And I think you're going to be right back near that 10 SMA. And so I mentioned the 10 SMA in last week's video with respect to SPYs and Qs. And I just said, well, we'll see how this thing reacts around it and see if it can zip away from it to the upside or if it can't hold it. And really, we are still there. I mean, you never expect when you say that we'll keep an eye on something that it'll be our focus and we'll see what we can do with it. You never really expect a whole week later that you'll be really right there again. I mean, and having not moved away from it very much other than this morning. So it's really been a very kind of listless week, in my opinion. I'm glad folks did well despite that. That's just great, a great sign. Usually, when the market's really going, we do much better than when the market is acting as it has really for so many sessions in a row. But that's not the case this week. So good job to all that really ground out took the opportunities and ground out profits this week. But don't even know what to say, right? I do want to make a mention of something that is on the note slide, and that is that there are negative divergences popping up. Remember, this is not a very sophisticated indicator grouping here. It's some very basic sort of old school classical technical analysis things like RSI, MACD, rate of change, but they're all really showing you that the momentum is tailing off here. And today's reversal candle with only an hour and a half to go, roughly speaking, that's not a good look either. So you might kind of have a new all-time high that gets made, but it sort of looks a little bit more like a double top. But that's certainly not the follow through you want when you make a new all-time high. It just shows you really how weak it was that it retreated this quickly. And we did say that subsurface, we thought there were a lot of problems with the market. It wasn't disastrous, but I think this is sort of indicative of the fact that there's a lack of enthusiasm and not a lot of things are acting really well right now. So you get this. I guess as bulls, we did say at one point during either last week's videos or this week, maybe they're just happy to run out the clock, right? It's been a great first half and they're set up with the best month coming up and their earnings season, and a big American holiday to get things started, which they normally rally into. So maybe this is the pause of refreshes, but I think you're really more in a concerned wait mode. I don't want to overplay the downside, but you're just not seeing great action at this point. And so I think you have to be prepped mentally for, well, what if this 10-day doesn't hold? And you could say, well, the 15's right there in red, and you'd be right. But other than that, maybe, it's not as widely followed as the 20. The 20 is very widely followed. So you might get that sort of dip to the 20. And they usually play some games around there. And then we see what happens, whether it's right back up again or that doesn't hold and we're down on our way towards the 50. And that really wouldn't be anything extraordinary. I mean, you can see when the market starts losing its momentum. Let's go through a few over here. What I might do is bring up the crosshairs. Where are they? I thought, well, I guess they're kind of giving me crosshairs, or I might even have it turned off. But let me go back over to here. But you can see where this sort of lack of follow through, nothing really great happening here. Momentum's getting smashed down here, and eventually you rolled over. And the same thing really kind of, happened here, where you did get this higher high versus here, but the momentum indicators, right, your oscillators, etc., they're not looking that great there compared to how they looked over here as a package. And then you slide, subsequent to that. So that's why I'm saying, right, I'm not someone who thinks divergence is the holy grail, but I think you do have to pay attention to it. And you do have negative divergences cropping up in the SPYs. And you do, I believe, have them cropping up in QQQ as well. And it too made a new all-time high, I think, today. I believe it did. If we get over there, yes, it did, barely. 487.20 versus 486.84 and 486.86. And yeah, so just barely above. But you can see that there's definitely a negative sort of profile here with respect to these momentum indicators. So I don't think you can rule out in the Qs or the SPYs that this 10-day, the challenge of the 10-day is still ongoing. Again, never thought that would be the case a full week later with such narrow ranges, but that's what we got. I would say the same thing coming towards the 20. If it does fail, that would be a big deal in terms of holding. If not, it opens up more downside. Now, that would really fly in the face of July, recent Julys, a holiday that's a big American holiday. The tendency to rally in front of earnings season officially getting kicked off at mid-month usually follows through with a good performance. Certainly does that in this presidential election year. It's really hitting the sweet spot now. So that would be a real departure, at least a temporary departure or momentary departure, but it could happen. Don't want to read too much into one really kind of ugly looking candle here, but it's hard to like that candle at the same time. So I think you've got to wait until you see the whites of their eyes, and you just have to do what you always do, which is right. Let them show you what can happen, and trade it, and then manage it. Right, and that's always the case. Whether if you're trading a breakout or a breakdown, some people don't even call them breakdowns, which is fine. Whatever you want to call it. Ron, our dear departed friend Ron, he always referred to it that way, and kind of popularized it among the folks that were in our services. So we kind of stick with it. But breakdowns, breakouts, you got to still manage them, right? You can't really get comfortable. You just don't know. Much like people that bought today's initial rally early on, those folks thought, okay, we open, they start jamming, they're going, going, going. If you didn't do a quick trim and you held on, you're probably quickly back to worse than break even. Maybe now, right, you're getting underwater. So you've got to be careful whether it's breakout or breakdown. Certainly, even in the direction of the trend, but certainly when it's counter trend, and a breakdown would be counter trend as well. So you've got to be careful about that. So probably not some easy trading right now, unless we really get a forceful movement that has legs, that could be the result of some news, known news or unknown news, just whatever the case may be. But I think everything sets up for a very strong sweet spot. So if the market does get itself in trouble, don't go to sleep, right? You've got to really be on your toes to manage that. Like I always say, I would get quick trims and rolls in. And if I can still make some good money against what had been a very strong trend, I'm doing very well, much like Market Rebels did this week to really put some nice returns together in a market that didn't really ramp, jam, or sell off very strongly. So that's really great trading. So that's really a quick look at the Qs, a quick look at the SPYs. Let's look at SMH, because it's probably the focal area of all of them, right? And for some reason, Thinkorswim keeps pushing me too far to the left and not giving me enough of the right. But you'll notice that looks a lot like the Qs. The main difference being that it and Nvidia is right near the 20 SMA. So that's been the big one we said to keep an eye on. Once again, I had no idea when we did the videos last week that literally 5 sessions later, we would be dealing with that, right? Where we've got this 20 SMA challenge still happening. Is it going to hold? Well, it has so far. And that's just a great example. For me, I'm not a big SMA person. I say it probably almost every week, but you can't deny that it has an effect. Right? I think when you look back and you see that at times these prices really do respect certain things, and it certainly respected the 20 SMA there in light blue this week. So we've got to give the 20 its due. Tried to put it together and reverse hard, but it's still holding. So that's why I'm saying wait until they show you more, right? Let the market speak to you. You need to see the whites of their eyes, is why I've got that note in there, because it's not giving you enough yet to say, you haven't really broken support yet. You could say, well, we reverse hard. It's ugly. It is. But right, just like it reversed hard from a rally attempt, it could really reverse back up after finding support if there's no selling follow through. So you just got to wait. And again, you always have to be thinking, I think, prudently in managing your trades. You get that good initial push, especially when you're going counter to trend. You've got to get that quick trim in, which I always say, if you've got a 10 lot basis, you trade a 10 lot, just sell 2 of them, right? Get a nice little single in on those 2. That way, if it reverses back to your trigger level, you can get out of the balance, not really lose any money, maybe still eke out a few profits, and then sort of reset mentally instead of feeling frustrated, which is part of the trading game, big part of the trading game. So I like to always mention that. But no one will be surprised when they bring up Nvidia when you've got the Uh, you've got the same sort of technical profile, excuse me, in place. You know, the 20-day is looming large, the 10-day is looming large. You're just capped between the two. I won't do this on everything we've looked at already, but if you're like me and you're a line person, and I happen to be a line person, a very kind of committed line person, as a matter of fact, you can do whatever you want. It's your charts, right? I would go with what you think helps you. That's what I learned to do, and that's when I really started unlocking the key. When I got away from taking advice from everyone and just made it my own, that's really when things improved a lot for me. But you've got that. We could even drop more of like a flat line on this stock. I think it's worth spending a little time on this because it is the stock of the moment. And right there, right? So you've got that flat line right there. So you break above there, I'd be willing to go with it. It has been in corrective mode now for the back half, really, of June. It hasn't really advanced. If it breaks down, I can certainly see another leg. And remember, with these kind of gaps that are down there, with everybody seemingly long the same names, you could see another plunge, right? And you could again trade down to the 50. So I wouldn't rule that out. Overall, they've got this thing really with some serious deterioration of a lot of these indicators, but you'll notice that it hasn't really given way, right? They put that little false breakdown there together earlier in the week. They fell below the 20 big and they brought it right back up again. And that's why counter trading against the stock of the moment is tough. It's not easy. It's historically like this in my 30 plus years of charting, right? This has always been the case. I don't know how else to say it. I know it's very tempting because it's in some people's eyes overvalued and ran too far and due for a pullback. And I'm on board with a lot of that in terms of the thoughts, but I just know better from having gotten smoked in my early days of thinking the same thing and then insisting that the market recognize my brilliance and take the stock lower when it wasn't ready to. But you have to admit, right now is a little bit scary here in the biggest stock out there, which is another reason why we could see a little ugliness. So I'm thinking, right, you've got to be prepared for all this. These things are just not in a good place, right? So let's cover other things like let's look at some of the mega caps that we haven't seen up close and personal in our weekend chart fest, because here's Apple, and you could say, well, it's got a lower high and these things are peeling off, and you'd be right. So it's not over for Apple, but it can't be shocking, right? You can't be shocked if you start to see this thing break down a little bit. And if it starts not supporting at the, oops, that's a flat line. If it starts not supporting at this support level I'm about to draw, you could say, well, it's got a lower high, it's got weakening momentum, and it's going to retrace a little bit more, maybe come into that rising 20 there in light blue. Could happen, right? But again, if they take it back down here, find support, and they start working it back up again, you don't want to overstay your welcome, especially if they're getting the market on better footing. Now, you could see, though, that we had that a while ago. I think some folks did okay with it, which was good. But I think that expired. But you can see the momentum just is not there, right? A lot of these indicators are telling you that it's at the very least, it's in breather mode, if not sort of negative divergence, maybe setting itself up for another trip lower. Again, these are not predictions. These are just assessments. I try to be objective about what I see from having done this for so long. And fortunately, we had Amazon this week. This is one I think that folks were able to get some good movement out of. And it looked really good. And that's one of the reasons why, I put it in there when I saw the UOA appear. But this thing did perform, right? But it's going to be tougher for it. And without news, right? And I do think it had the aid of news, but without news, it could be tougher for it if the whole market's being brought down. There really isn't any negative divergence there. I mean, it looks fine. It doesn't look stellar or spectacular, but it looks fine. But let's just keep going to be thorough. And I had some Google bullish ideas as well this week. And there was a lot of ostensibly bullish UOA in Google, and it did perform. It did put a nice it put a nice little week together because it's not really a great mover the way it once was. It's been more of a controlled mover. It has its gaps here and there, like stocks do, especially around earnings, but it's been more of a controlled mover. But it had a nice little push that it put together. So this one also is not too bad in terms of negative divergence, but the we do have that with SPY, with QQQ. There's problems there. Meta is one other one you can see where there's similar highs here, and you can see that it's peeling off, right? A lot of these indicators are showing that it just wasn't as forceful of a move to this point. So if it does roll over from here further, then you do sort of have that negative divergence sort of like setup, right? Where you get the slightly higher high and you don't do much with it, and then you reverse back down. So there's another one that's flashing that. So far, my count is 2 and 2, right? Where some of these big dogs are a little concerning, and Microsoft is one day from an all-time high, and I'm certainly not going against it. But you can see that because it lost its swagger, and it's really been treading water, consolidating now for a week and a half. It just doesn't have a really strong momentum profile. Shorting this right here to me is not something I would do, because just because it's taking a breather and losing momentum to me doesn't mean that it becomes an instant short. I need to see it crack, and I need to see other things cracking along with it for me to give a lot more credence, right, to deliver a lot more respect to these negative momentum readings. But for now, it's actually a really good thing, because if you can be barely removed from your all-time high, holding above the rising 10 SMA, all the other SMAs are rising, and they're stacked nicely, and you still find a way to take the overboughtness out. It doesn't really get much better than that. So you're not as overbought as you were. You kind of chilled out a little bit. You back things off small in different ways, depending on what you want to look at, MACD or rate of change. And now you're sort of sidewaysing it. But it does have a little bit of flash that way, where it's not stellar, right? So if we kind of look at that, it's got a little bit too. Let's take a look at Netflix. This is another one that we had as a long recently. I don't remember when it expired, but it just performed, and that's why I think in some of the UOA, at least, folks were able to hang in there and do okay recently, despite a market that hasn't been that easy. Lower high here, right? And you can see you've got this sort of negative divergence forming here. So possible sort of mini double top or lower high, little concerning that way there. And I think you've got TSLA is a little bit of a different story. So as I said, some of these big dogs, megas, do have some of that look. Tesla finally did something and broke out this week. I wish I had some paper on that, because I started to see, I thought, some good signs forming, but I never saw any paper come in on that. But so those are the big dogs, and they kind of look mixed overall, but there are some concerning signs in there. There's some concerning signs in Nvidia, some concerning signs in naturally SMH, and of course the Qs and the spiders. But it's not complete doom, right? It's just not complete doom that you're like, wow, this is really this is all hell's about to break loose. It could. It's just that I don't see in the charts that it's telling me that this is really on borrowed time, and that there's about to be a real beatdown that's about to occur. Could be, but not something I'm seeing. Let's do IWM and the diamonds, just to be thorough on the 4 major index ETFs that we cover and trade, with probably the SPYs being the most traded, IWM second most for us. I mean, Q's third, and diamonds certainly in the rear. Diamonds with a rough day, right? They finally start to do something. Last week, popped through early this week. Again, they reversed down. Try again, they reversed down, losing momentum down here right now. Yet they're above the SMAs. right? So what do you do with that? It's still uptrending overall. Your long-term SMAs are still showing you a positive slope. So you're in a messy phase. That's all there is to it. And that often, I've said this many times. I know the like long time masochists that tune in to watch this video consistently over the years. Basically, that's what we've always said. I don't think I've ever changed on that because I've felt that way for decades, which is to say that when you can't really come up with a strong opinion, you're probably right. In other words, if you're not really feeling a good lean, there's probably not a reason to feel the good or bad about the market. On balance, if there's a lot of mixed signals, conflicting signals, then that's telling you, right? Maybe it's noisy right now. Maybe I should wait it out before I get too aggressive. Pick and choose my spots, find stocks that look the very best, get involved in those, but I'm not going to trade sort of a large basket all in one direction right now because I don't have that strong lean. And that honestly, it took me a while when I first started to not always force an opinion and know when not to. And what I realized after a little while of doing it was that when there just wasn't anything there to really give you that deciding factor or push one way or another, you were reading the charts the right way. There probably wasn't a good reason to be that way. So just wait until there is. And it's frustrating because we all want to trade. When we every day you want opportunity, but if it's not there, the best thing to do is, in my opinion, not force anything and just kind of hang in there, wait for your opportunity. Just be very choosy and just get bigger when the time is right. Anyway, IWM, another example of yet another IWM sort of false pop breakout. There's been many of these, right, where it looks like it's ready to go and they bring it right back in. So another one here got above all the SMAs, and now they brought it right all the way back in again today. So it's not the end of the world because it is supporting there, but it could get worse, right, when you have yet another lower high should you roll over from here. So again, another one that bears watching. I would be inclined to go with it if it tries to reestablish this upside momentum and takes out this high, or it looks like it's about to take out the high, and then it does, and then you're trying to see if it can get to that next big visual level up there, 207 and change. And it certainly could do that, but for now, it's really nothing great. I mean, I'm not really worried about rushing into this as it stands right now, and I'm not really getting ready to short the living daylights out of it because it's above all the SMAs and using, it looks like the 10, 50, and 20 for support right now. So why do I want to sell right on support? I'd rather just wait it out. Now, I will say it's not a great look with a lower high put in, and I'd get concerned about it very quickly, but you have to fight your way through almost every SMA, including that rust-colored 150, where I'm about to draw a support line near. You have to really get through all this to really feel like you're really going to get bigger payoff on it. And that support line really kind of comes, for me at least, that comes right near that 150 SMA. So you may as well you just say the 150, which is down near 199. So if you don't crack 199, how much payoff are you getting? You could do a little trade in there. There's nothing wrong with that. It's just that how much are you really getting? I really like things where when they break through, I feel like there's a lot more room before it really is going to encounter support or resistance. And this one, I see it encountering it quickly. I mean, I like this more as an upside trade, but it's not able to sustain momentum. So it is what it is, right? It's just not that great right now. If you ask me, I mean, it could end up being a stealth thing though, where, this does not have a great look to it, but it could be a stealth thing for it and other things where they kind of let the clock run out on Q2 first half, and they come at it, strong next week and kind of surprise everybody. Could be. We'll have to wait and see. But those are your big dogs there. Let's cover some other macro things like the dollar. But all I'm really going to say, and I know this is redundant and a little boring, but when you think it's what it is, you've got to call it that way, right? I don't want to just try to come up with things for entertainment's sake. And the reality is that the dollar didn't do much. If you look at where we closed last week, 105.83, you're at 105.86, right? So here you are 5 sessions later, just about the same place. So the dollar still sort of long term and short term wanting to move up, but it does potentially have a lower cluster high in versus here. And so if it doesn't exceed this and starts breaking down below the 10, that would be really a failure, at least a temporary failure of really an attempt to rally. So again, we have to wait. You're waiting and seeing. You may as well trade it long above the recent highs if you want to trade this thing. And then you could trade it below the 10-day, knowing you're going counter trend, but you think maybe there's a sea change. But no, the bid dollar to me, not a great thing. But it's not anything really where it's getting back towards the highest highs we've seen in, let's say, a year or something like that. So you're in sort of this boring zone. I do think TNX kind of redundant again, but I think TNX is just almost right now the victim of some people deciding they're going to turtle up a little bit. So, and some of this inflation data that folks tend to get carried away with. But I will mention, I have this in this week's notes, that we came across some information that suggests that some of the longer term oriented stuff that people track for inflation forecasts is upticking again. So if that stuff, which has actually been fairly reliable, it kind of called for us, it kind of called we're not getting a cut anytime soon. It's actually upticking again. So that might really monkey wrench things. But I do think there's one reason why TNX hasn't responded yet. It's just because people are maybe going with all the stuff swirling out there. I still think the VIX is ignoring nearly all of it. I feel like the VIX is acting very oblivious, but we also have to say that right, this could change dramatically, just like the TNX could change dramatically if this, that, the other thing. But this probably has a lot to do with the seasonality. I mean, a lot of people are now realizing that July has been a very exciting month for stock owners. It's been stellar of late over the course of time in the presidential election cycle, fourth year. This is really the sweet spot. So I'm still putting the reminder on there to really learn about being net long puts, learn about acquiring implied volatilities in the right places further out in time at times. But I'm not saying you need to rush into it. You just got to get ready for that. I would look to late this year, like really for me, it would be ideal would be November. And then I would jump to February after that, which is what I mean by early next year. But in the notes. But anyway, that's again just a reminder on that. But with everything swirling out there, I still feel like the VIX is oblivious, just utterly oblivious. And but I get that it's crushed here in front of what could be quickly become a week where suddenly you wake up and it's sort of like, oh well, it's July 8th now, right? Where you kind of get through this holiday week and you're like, wow, it's already the 8th, because you had the half day. A lot of people probably just say the heck with it, and then you've got the day off, and then who wants to come in on a Friday in the summer after the 4th of July, aka Independence Day? A lot of people will probably just be like, the heck with it, and turn it into a long sort of mini vacation, right? Thursday through Sunday, so, or at least Wednesday through Sunday too. But anyway, yeah, so you've got that factor, and it makes sense from that perspective. The VIX is sort of smoked and could get further smoked, but I still think it's a good reminder as of right now. So those are some of the macro things. Another macro thing is the light sweet crude. And we did see some paper in the XLE sector, right? So we have OIH as an idea. We're getting prepped because things are getting, I think, a little bit better technically here. And when I start to see both of those factors, where finally, after a long consolidation and then a long correction, and on top of it, you start to maybe emerge, right? And things start to look better technically. And I see paper. I mean, that's what I'm really looking for, right? That's all I can do is set the table for myself as a trader and for folks that trade in the services, because you never know, right? I can't guarantee that it's going to work, but I think you've got to be on watch. If there's one good thing I can say about this weekend's video is I would keep this XLE and on that area, the OIH, the names within XLE, whatever you prefer. Ideally, you're going with individual names within XLE, but these things are starting to perk up with UA. You can see my resistance line we've had there for a very long time. The 50 is the only SMA above it. If that gets overtaken, that's a good sign technically for a lot of people, and you might start to get trend resumption. And the last leg up was quite good, right? That was a nice sustained move for months there that kind of petered out in April, and it's been backing and filling ever since. But you start to get another leg up, right? That could really be a strong leg. So don't want to tell people to get too far ahead of themselves, but there was paper. I do remember DVN as well. This is one that had paper. It's trying to kind of curl its way up. It might be a little premature still. It's obviously put quite a few false breakouts together, failures. So you've got to be on guard, but ever so slightly, right? You're seeing the paper start to trickle in and pick up, and you're starting to see the situation improve technically for now. So worth watching as a long side trade. Another couple sectors we need to talk about are XLK and XLC. And you had this similar performance to the Qs this week. So there's that. But XLK, which really has been the leader, it's hanging in there, right? Just like the Qs are. So I think it's too early to say, hey, this is a lower high, it's about to roll over. But we also know that it could. I'm not going to put the lines on there. These are all very similar. But right, you've got the potential for the lower high. You really have to be careful now, because if you do get a breakdown, it really starts to take that sort of intermediate term corrective profile of high, low, lower high, lower low, right? Then you maybe get a little bit more follow through and you come back to maybe where you broke out from. And for me, that would be somewhere around that percent that Thinkorswim's flashing at me. My gosh, I can't stand that it does this. It's just frustrating. I don't like that. I don't know why it switches this way on me, but it would be really right near 216. So that's a decent little drop, right, as a ballpark number. So not incredible, but it is a 4% drop from where we are now. So that if there another leg develops, so you may as well use the 15-day. You can see the 15 in red. I mean, that pretty much is your support. If you wanted to be aggressive, you could trade when you anticipate it's going to close, break below there and close below there. Another one that has been a leader, which is XLC. This one had an all-time high today, I believe. A new one, I think. Let me double check by bringing more data in. Yep. Well, barely, it looks like. Well, I guess I got lucky with that one. I thought it was, but so it's pretty hard to say horrible things about a sector that's making new all-time highs. So let's not get too doom and gloom on that one. But yeah, I mean, right, it's probably more of a victim of just the market itself right now than it is anything else. That, hey, the market wasn't able to hold the early rally in reverse, so people start selling other things. So not a good look on today's candle, but overall that had a good week. So the XLK, XLC have sort of been batoning it from at times where XLK is looking a little better, and then XLC is a little dormant, and then XLC gets going, and then XLK comes back in a little bit. You get the idea, but that is what it is, right? It's just that they're still hanging in there overall, just like the market. So you're at a tough juncture when you look at those two combined, just like you are in the Qs and the SPYs. It's just not an easy time to say, yeah, hey, let's go long here. What do you make out of this XLF, right? You've got this lower high, you've got this lower low in here, right? So this is sort of a intermediate term trend in my book, and it's not acting well, but it's just correcting right after this again there's a great example of, right, you have a second high, you take that out. The gang is excellent at barely exceeding critical levels, and then rug pulling bad, this is a great reminder on this is why you have to be disciplined when your breakouts and breakdowns don't work, because these guys are not playing for fun. They are playing for take no prisoners type stakes. And if you held on every day, your life just worsened, right, for 2 weeks practically. So now, right, this is another false breakout above the remaining SMAs, but you haven't broken below this week's low, nor have you broken below the 100 SMA there in dash white / gray. So whatever the case may be, you're in a triangle. Everybody can see that without me drawing it. And so really, you're waiting for a break above this now, and you're waiting for really a break below that level. If you're me, I don't really, there's nothing wrong with getting in below the 100, but know that that's just a little aggressive. But I'm waiting for this, and then you get your range expansion, right? You either start breaking down to here, or you start breaking up towards levels like this, right up in here, and you try to go from there. And ideally, right, you're in harmony with the market. But right now, this is not an easy trade. And again, this shape, another important sector that shapes up where there's just nothing great about that right now. You really, again, have to wait. I think you have to wait things out. I don't think there's a great tell. Oh, this is what it's doing, that you can just get excited about. XLRE real estate with a week to nowhere, just to kind of cover this, because I'm going to mention XHB. We do have a short in XHB. I shouldn't say a short. It's really more of a naturally, of course, with us, it's a put play. We don't really short things. Come on there, Thinkorswim. So we do have this short side or bear side play in here. And you can see that not a great look, I don't think, in XHB, not a great look in real estate. And there's been some reports of there's massive layoffs coming in this area, which would sort of confirm that maybe the best times are in the rearview mirror for now, especially with rates not coming down. But look, it won't break down, and it's been a very strong trend. So it's really not surprising, but I think you have to wait for that low, which is basically saying the 150 SMA there in Rust has got to break. If that does break, it probably does buy a little bit more downside. Certainly there'll be some flatline support along the way, but that's what I'm waiting for people to get more than just maybe like a single or picking up enough money to go to the movies, which isn't cheap these days, but you get the idea. You're just not making that much money in this thing yet, even though it did break down. So we need to see that break a little more, but I just don't, it's not a great look. You can see the 150 is really what's keeping it from getting hit harder. I think if it doesn't support there, it's in trouble. And I don't like the way the charts are shaping up in terms of the cycles that I like to watch. So that's another good reason to keep an eye on that to the short side. If the market, obviously, I should always remind everyone that this all has to do with really trying to trade with the tide as well. And we're big on that. I don't know. I know not everyone is, but I really believe that it's a lot easier to make money when you're in stocks and sectors that are working in harmony with the market. XLP and XLY, we have to look at both of them because they're both important and they relate to each other. And you can see the staples are losing their luster. So this is where some other conflicting signs come in. So that's sort of theoretically less defensive. And then this would be more offensive because XLY sort of had a decent week going for it until really this reversal today. It was sort of working its way back up, and now it reversed. And it reversed very close to levels, right, where he's had trouble getting up 3 other times. It was near here and couldn't pull off the trick. But it's still rising. SMAs are mostly still rising. It's above all SMAs. They're all nearly stacked, except for maybe the 50 and 100. So otherwise, it looks pretty good. And I would say that this looks much better, as you can see at the moment, than what we saw in XHB, right? And this is part of the reason why I do this and have done this for so long, is just because you get that sense of, well, if the market's acting well, I'd probably rather be a player in XLY because it's acting better than XHB and things like that. Like, we can go into that some other time, but you get the idea. So that is sort of more risk on than in on balance between those two. But again, today's sort of disappointment, it doesn't leave you with a very good feeling to finish the week, right? Just remember though that earnings are coming up, and the way the weights are and so on and so forth, if they can get things jamming here, that could finally break out if it keeps getting close on some sort of earnings and guidance and things like that. At the same time, it could fail again for the same reason. But that's looking better, and that's sort of part of the bullish argument. Well, this is actually starting to flip around the way you want it to, whereas discretionary is perking up and staples are on under pressure. But XTN really transports, despite the FedEx madness this week. These are looking a little better, and you're trying to work your way up now. And you did hold after you popped, you did hold above the 20 there in light blue, and you're working your way towards that purple 200. And there's not much left to get in the way. So maybe, just maybe, because we are seeing some positive action down here in our indicators, maybe things are slowly on the mend here. And if they are slowly on the mend, I think that's really big news, which is another part of the bullish story this week, because this has been a real sore spot. And without this participating, it's made it harder for the market to really advance with gusto. In my opinion, at the same time, the buybacks that we said were going away roughly around mid-month this month, they also seem to make it harder for the stocks to go higher with much enthusiasm. So the lack of really companies buying their own shares did end up, it seems to at least have ended up keeping the market well under control versus how it had been behaving. I don't want to get into XLB and XLI all that much, but they're not really doing much here. I don't see a lot there that I can say, well, this is exactly why I'm bullish or bearish. But on balance, I just don't like the way they're acting. They were kind of world beaters for a while there, but they've really been consolidating. There's just nothing atrocious about them at the moment. I think XLB looks a little worse than XLI, but nothing really atrocious there. They've just been consolidating after really acting much like energy early, with a great performance earlier in the year. And then they've really been at the mercy of the gods of consolidation ever since. So we have to wait. Another word, we have to wait and see. XLU, as we said at the time, go with it, go with it, go with it. And now, they're showing some signs of, maybe it got too far, too stretched. I think I even had an idea on in there, and I really hated to even put it on because it was so strong. But I think we did, because it just got a little out of control. But I don't remember how long ago that was or whatever. We kind of played the downside in that one. But the reason I'm just bringing that up is just for thoroughness, and it's kind of returning to the scene of the breakout crime. And this is something I talk about all the time, where, I try to explain to people that this is a very common occurrence, that where something breaks out from, it may take a while, but it will often return to there fully, which not within to the penny necessarily, but you get the idea. I mean, one more bad day, and I'm going to put it in the books, if you know what I mean. So I think that's a good round trip on everything. I do think it's really more of a whites of their eyes thing. I think you're really close. Obviously, right, the flashpoints are probably going to be the stock of the year, the stock of the eons, whatever you want to call it. But world beater, Nvidia, is probably where we should be watching, because if they get that thing going and they get their AI trade ramped up again, all the talk and all the that flows from conference calls regarding that, then that can get people juiced up and money flowing back into the market again. So on that note, let's just make sure we covered everything. I did call it list. I do think these were weak, new all-time highs. This week to me was a dud. So again, hat tip to everyone that did very well, which I'm really impressed by. You had the new all-time highs, but you reversed exactly where you would guess, right back to the 10 SMA. Practically spent the week there. The diamonds in IWM, they're not really enthusiastic. We saw that, but they avoided really poor performance, which is good. unfortunately, IWM with the failed breakout. Still stick with Nvidia, SMH. Really, that's where my watch would be. If I can't watch more than one or two things, I'm watching those. But those would either put the damper on the market's party, or they would, really resuscitate the market. I don't think the sectors are out of the woods. There still are breadth divergences. It's a good thing I looked through the notes. I can sort of show those. These are not, these are just a bunch of things. I really wouldn't read too much into the fact that these are exactly what they are. These are just a general look at some basic things. But the whole point of this screen for me is to see if you're getting really strong sort of adherence or confirmation. And we're just not getting that, right? You're still seeing where there just aren't the new highs that we were making. You're seeing really more new lows have been perking up lately. You're on the comeback trail a little bit, and the trend is still intact. So it's not the end of the world, but there's some issues that are just cropping into it. So again, that's sort of the other side of some of the positive things we've talked about, where I just don't like this overall. It's not doomsday though. It's just not doomsday. So that's that. Let's go back to just a basic chart so we can talk about things. So yeah, I don't think things are out of the wood. I still see the negative divergences. I showed those in the SPYs and the Qs and some of the mega cap stocks. We talked about the flight to safety and the dollar and all that. We talked about the complacency in the VIX. We talked about, I didn't talk about KRE being saved. So, right, KRE, which was an issue, they managed to really, we were looking at that. If it got close to these lows, it would be a problem. Well, they managed to lift it away. So again, not that you're out of the woods completely, but you are sort of further away from trouble, right? They would have to really have significant trouble to really get back to where they'd be in bigger technical trouble. So that is a decent little development. That's, obviously bull side of the of the equation this week, excuse me. Like I've been saying, keep the math in mind. If you wonder how's this market still not going down with all this negative stuff going on, just remember they've just got to keep the biggest of the big dogs, the megas, going, which they largely have, and you're good to go. You can hang in there and the market can just sit there and churn. We did maybe get this back half rest in June, right? Once the buying dried up. So now that we haven't really advanced at this feverish pace, you're really not overbought. So if they start to get things going into when the earnings season starts in a few weeks, they might be overbought by then, but they've got some room to run before I think they really take a lot of things into overbought territory. So as of right now, things are, in that regard, things are set up well for bulls, where they're not launching a rally, should there be one, from an super overbought state. We've got the market, we got the start of the quarter, start of the second half. We talked about July. They've got the markup motivation in front of Independence Day. Again, the wheels are still coming off. There's still big issues out there. As I mentioned, the little change this week is that sort of leading inflation data is ticking back up again. We talked about the sectors. Don't want to talk about anything that there. I'd say, look, you're still under an Esterhaus warning, which is just be careful out there, extra careful because of where you are. We talked about that 10-day and the range and the consolidation you're mired in. So you all saw the lines. You can draw them yourselves. That's where you're at. So you've just got to wait it out on that. And again, always protect against false breakouts or reversals once you're in, because that's just part of the game. And the final comment is remain too close to those 10 SMAs for us to in the 20 in Nvidia and SMH to feel comfortable, especially when you add in some of the subsurface stuff that we've seen. So it's not all great out there, but it's not all dismal. Again, I think you're in a wait mode before you commit more heavily. Remain disciplined as usual, and then you're leaving a lot off the table. But as you can see, just to get this covered, in one video, it does take quite a while to go through everything. I wouldn't read. I think we've seen a lot of Fridays lately that just haven't been that wonderful. So I don't want to overstate or understate today's kind of like poor action, but it definitely leaves a sour taste in your mouth that you try to make new all-time highs, and then you're reversed, and you might even within 45 minutes left, you might even close, near the lows of the day, if not the week, the way it's shaping up. So if it has a really poor close, that's even worse than what it's been already. So on that note, I'm going to wrap things up. I hope everyone understands I've got to combine the videos just in the interest of time. There really isn't anything other than XLE and XTN sticking out to me really on the bull side at the moment, and XHB and XLRE on the bear side. So we covered those, but they're not really great in a market that's not that great. So I would just kind of keep a little chill on there and not get too excited about anything. Just trade it with the cool demeanor right for now, and wait to get aggressive when we see more action develop, and the market sort of tells us to do that. But everyone, I hope you all have a great weekend and safe weekend. And if you just scoot out, I hope you have a great Independence Day holiday. If I don't get to wish anyone that during the week, during webinars, I want to thank everyone for tuning in. And as always, I hope you got something out of this video that will help you out next week or some week in the future. Thanks again for tuning in.